That today we have a great deal of opportunity to buy ownership in companies. And the same way that a company can be located in Singapore or Taiwan, it could be in California or New York or Florida in the US, it turns out that companies can be bought and sold pretty much around the world. And if we were to redraw a map, and instead of landmass, we were to plot the value of all companies that can be bought and sold in any one particular stock market, and what I mean by value is how much is worth the ownership of that company. When you take the shares of ownership multiplied by the price, it's something called market capitalization. If you were to look at the value of the companies, it's quite interesting that this is what the world will look like. The largest stock market in the world is the US stock market. And if you look at the US stock market, it amounts to about 59% of the value of all companies that you can buy around the world. Right now, you can purchase ownership in about 3,600 different companies in the US. What are the largest ones that you can buy ownership? What do you think? What's the number one right now? It used to be Apple. It's Microsoft. Microsoft, Apple, Google, Facebook, and beyond those companies, there is a McDonald's, there is a Starbucks. Do you have Shake Shack in Singapore? Shake Shack, it's another burger joint. All of these companies are available for you to buy ownership in the US. And that's certainly important to know because it is by far the largest stock market based on what companies are allowed to trade. But that's not the only place. Roughly about 40% of the value of all companies in the world is outside of the US. And if you go in that respect, should you go buy stocks only in the US or in China or in Australia, or should you go around the world? And I get this question a lot. What does it actually mean what are these companies? Should I buy only in the US or not? And it made me think of just how fortunate we are in the US and also here to be able to purchase different cars. And buying stocks in the US means that you own a piece of Ford, GM, Tesla, which are great companies, they make great cars, and they are being sold around the world. But both in the US and here, these are not the only cars. Do you folks see Mercedes and Beamers and Porsches and VWs on the streets here in Singapore? Of course, they're everywhere. Well, those brands are owned by companies that trade in Germany. You have great American brands like Jeep and Chrysler. They're owned by a company called Stellantis that trades in Milan. That is Italian investing. You have the Japanese companies that we're all familiar with. And beyond that, even British brands like Land Rover and Jaguar, those are owned by an Indian company that trades in India. And my daughter drives a Volvo, and that company ends up, being owned by Geely in China. In the US, you have a lot more of the Korean shops selling cars in the US. So ultimately, to me, what I'm suggesting to you is that as an investor, if it's worth considering Ford and GM, why not consider BMW and Toyota and Jeep for that matter? That is what we're talking about in investing. You want to buy ownership in companies around the world. And that is, first of all, the fundamental premise. And what it also means that when you invest money, and this is what the Provident team does, you have to be a little mindful of how much money do you put in each part of the world. The Chinese economy is huge. Look at the Chinese stock market. How big is the Chinese stock market in a bigger perspective? How big is it? Can you see it? 4%. Hong Kong is 1%. And those folks in Hong Kong, it turns out that they would put 20, 30, sometimes 40% of their money into the Hong Kong market. That is called home bias. Does it make sense? What do you think? What would be a starting point to put your money? Well, to me, this map is a starting point because it gives you an idea of the companies, where they're based, what's their worth, and then you can start deploying money based on that. Now, this map, the way it is, and Joel actually pointed out this in Hong Kong, this does not stay the same. These stock markets change. And the biggest realization came to me in December when I had the good fortune to be in Tokyo and met with some Japanese families. And what I heard was a pretty interesting story that is really relevant for us today. Because back in 1980, in the 1980s, remember the good old 80s? It turns out that the Japanese economy was the envy of the world. Their business case studies about how amazing they run the economy. They had some technology stocks of the day they were selling all over the world. When I was in high school, the biggest thing that I wanted was a Sony Walkman. Remember those? The Sony TVs, the color TVs, the Panasonics, the VCRs, that was high tech coming from Japan and being sold all over the world. And because of that, in the 1980s, the Japanese stock market went up about 22% per year in Japanese yen, meaning that if you had invested 1 yen at the beginning of the 80s, by the end of the 80s, it would have increased sevenfold. Sevenfold. And because of that, you know what's crazy? Japan right now is about 6% of the value of all stocks in the world. That's the Japanese market today. There are 2,500 companies, Sony included, Honda, and so forth. The US is 10 times larger. At the beginning of the 90s, the Japanese stock market was actually bigger than the US stock market, quite significantly so. And back in those days, the Japanese investors were saying, look, we have an economy that is the envy of the world. We have some unstoppable high-tech stocks. We have performance that is outstanding, and we're the largest stock market in the world. And guess what they did? They plowed all the money into the Japanese market because that made so much sense. And you know what's fascinating? That's exactly what I hear in the US. Investors are saying, why would I want to put money anywhere else? We have an economy that is the envy of the world. We have stocks that are unstoppable, these high-tech stocks. We had phenomenal performance over the past 10 years, and we are the largest stock market. And I think there's, by the way, by no means am I implying that's the direction of the US market. But it is an interesting case study. If you think about being an investor, you have to be globally diversified. You can't just follow just one market. You have to buy across the world. My first contention to you is that you ought to consider being a global investor. Buy ownership in as many companies as you can.